Part 2 of the demonstration problem. I'm on page 24 in the study guide, and we're ready to begin item number 6. All right, so item number 6, we paid $10,200 for employee salaries. Again, anytime cash is involved, do that first, because then it's easy to know if you gained or lost money. And in this case, we're spending money, so we're taking money out of our cash account. So we paid $10,200 for employee salaries, and we have not yet made a salary expense account, a salary expense T account, so we'll do that down here. So salaries expense, and that's going to be on the other side because our cash came out of the right hand side, so the salary expense is going to be on the left hand side, and that was $10,200, and that was item number 6. Okay, our next transaction, number 7, we purchased office equipment for $16,800 with credit terms for 60 days. So we are gaining office equipment, which is an asset, and we're adding to that, well, how much was it? $16,800. $16,800. So item number 7. And we are not paying for it with cash, we're owing later. So that would be accounts payable, other side of the T, adding to accounts payable, $16,800. That's item number 7, with my best kindergarten writing. Okay, item number 8 says, we sold an investment portfolio to the Williams family and will receive commission fees of $30,900 in 30 days. So we did our work, and we're going to get paid later. Okay, so when we get paid later, that is called accounts receivable. We don't have that account set up yet, so we're going to set that here next to cash. Accounts receivable, that's when our customers owe us later. Accounts payable is when we owe someone later. Gosh darn it, my pen got stuck. Okay, so that will be added on the left hand side and subtracted on the right hand side. We did our work. Let's start with fees income. So we did the work, so we earned our money, $30,900. Okay, and we're on item number 8. And our customer will pay us $30,900 later. That was item number 8. Okay, item number 9, we issued a check for $6,800 for partial payment for the office equipment, and they should have said that we previously purchased, but well, we can kind of imply that. So we issued a check, so we're going to be losing some cash here. So $6,800 out the door. Okay, and that was number 9. And we're partially paying for some of our office equipment. They didn't tell us which one, but we can guess it's the $16,000 one. We're paying some of it, $6,800. That was item number 9. Okay, and item number 10, Anita Thomas withdrew $7,500 in cash for personal use. Start with the cash, that's the easy one. And that was $7,500 out of our checking account. This is item number 10. And we need to have a drawing account for that. And let's make the drawing account right here. So that is Anita Thomas drawing. And actually I see a mistake here. Let's fix that. So on the first entry where we had owner's equity, Owner's equity is the type of account, but really the name of that account would be Anita Thomas Capital. Okay. All right, now back to the drawing. So we are going to, drawing kind of acts like an expense. So you add to it on the left-hand side, and you subtract from it on the right-hand side, which you really never subtract from it. You always add drawing. Okay, it's just a place for you to have a contrary account to the capital account. So it should act opposite of the capital account. So it's going to take away in the end $7,500 from our ending capital once we do our statement. Okay, one more transaction, and that is issued a check for $1,560 to pay the utility bill. And so again, easy on the cash one. So $1,560. So item number 11. So we need to have a left-hand entry on our expense account. We'll make it here. Utility expense. $1,560. Item number 11. Okay, so now we have completed all of the transactions in T-account form. Next, then we need to get balances on these. Before we do the balances, let's talk about each one of the accounts and just a little bit about them. So recall, change my pen color here. Recall our accounting equation. Assets equals liabilities plus owner's equity. Okay, owner's equity, if you want to define that further, is the capital account, the drawing account, the revenue, and the expenses. So capital, drawing, revenue, and expenses. Okay, so capital increases our owner's equity, drawing decreases our owner's equity, revenue increases our owner's equity, and expenses decrease our owner's equity. All of these are owner's equity accounts. Okay, so let's look at the T accounts we've got here. So we've got cash and, where's my little mouse? Cash is an asset. Accounts receivable is an asset. Accounts payable is a liability. Office furniture is an asset. Office equipment is an asset. Utilities expense is an expense. Come on. Rent expense is an expense. Fees income is revenue. Capital expense, and drawing, we could call it a capital account too, just to kind of help us organize our thoughts here. Now, again, in the classroom, I would have each one of these little T accounts on its own separate card. And then we could line up all of the assets on the left side of our desk. And then we could line up our liabilities, or in this case, there's only one liability. And then we could make a little area where we have our capital account, our drawing account, our revenue and expenses. And to me, it's a visual way to learn the accounting equation and how each one of the accounts falls into the equation. For me, when I learned accounting, that sunk it in for me. So hopefully a little exercise like this with index cards might help you too. All right, the next step to do in our problem is to create, to determine the balances for each T account, and then to create a trial balance. To create the balances, let's see. So an asset account is going to have a balance on the on the side of the increase. So the balance is going to be here. Okay, and accounts receivable, same thing. The balance is going to be on the left-hand side. Accounts payable or liability, the balance is going to be on the right-hand side. Boy, my pen just wants to work sometimes. Office furniture is an asset. The balance is going to be on the left-hand side. They call that the normal balance. There are times when you have an abnormal balance, but not very often. Office equipment, the balance is going to be on the left side. Expenses are going to have the balance on the left-hand side. And fees income is going to have the balance on the right-hand side. Sorry. Capital will have the balance on the right-hand side. Drawing will have the balance on the left-hand side. And our salaries expenses will have a balance on the left-hand side. So instead of writing like a kindergartner, I'll just say what I mean. Okay, so if you're doing this along with me, you should add those up. Check your work on page 24 and make sure you come up with the balances that are listed on page 24 in your study guide. And then to create your trial balance, you take every single account that is on this list. And I know, let's see, do I even have that? I didn't make that yet. So let me do the trial balance on a third movie. So part 3 will be coming.